gas prices in Idaho have taken an unexpected turn. After months of steady decline, they're now creeping upward. But here's where it gets controversial. Despite the usual post-Labor Day expectation that fuel costs drop, regional supply disruptions have actually pushed prices higher. So, what's really going on? AAA Idaho released the latest update showing that as of Monday, the average cost for a gallon of regular gasoline in Idaho stands at $3.51. This figure is about 5 cents more than last week's price, though it's still slightly cheaper by a penny compared to a month ago and 7 cents less than the same time last year. On a national scale, the average gas price is currently $3.18 per gallon. This is a tad lower than last week by 2 cents, but it has increased slightly by 2 cents over the past month, and it remains 3 cents less than prices seen a year ago. The real turmoil stems from the Northwest. According to Matthew Conde, Public Affairs Director for AAA Idaho, Oregon relies heavily on fuel delivered from Washington. About 90% of its supply comes from Washington's refineries. Recently, an unexpected shutdown of the Olympic pipeline caused supply shortages around the Portland metro area, causing pump prices in Washington and Oregon to surge about 20 cents in just 1 week. Idaho, while not directly affected by the pipeline shutdown, has felt the ripple effects of this regional disruption. The good news is that the Olympic pipeline has now resumed operations, and drivers in the region might soon enjoy some relief at the pump. Still, the aftermath of these supply issues has propelled Washington to hold the dubious distinction of having the highest gas prices in the country at $4.66 per gallon. Oregon isn't far behind, ranking 4th nationally, while Idaho sits at 8th place in terms of gas cost. An upcoming change could brighten the outlook. The seasonal switch to winter blend fuel, which generally costs less to produce compared to the summer blend, may lead to additional savings for consumers in the weeks ahead. Conde remains hopeful that this transition, combined with potentially reduced demand, will help bring prices down. This would be a timely boost as many people start preparing financially for the holiday season. Crude oil prices, which heavily influence gasoline costs, also provide insight into future trends. The West Texas Intermediate WTI benchmark is currently trading near $63 per barrel. This is about $1.50 higher than last week and roughly $1 more than a month ago. Market watchers generally expect gas prices to follow crude oil prices. If crude remains below $70 or even dips under $60, gas prices might decrease accordingly. But here's the catch. Energy markets are incredibly sensitive and can change rapidly. As Conde points out, a single crisis, whether geopolitical unrest or a natural disaster, could drastically shift prices. Though this hurricane season has been relatively quiet so far, the U.S. still faces its peak storm season, which could disrupt supply chains and gasoline availability. In the meantime, AAA urges drivers not to overspend on premium fuel unless their vehicle's manufacturer specifically recommends it. Research from AAA indicates that opting for higher octane gasoline as a treat for your vehicle does not significantly improve gas mileage or engine performance. So sticking to the recommended fuel can save you money without sacrificing efficiency. To give you a local snapshot of current gas prices as of September 15th. Boise, $3.54 per gallon. Coeur d'Alene, $3.56 per gallon, marking a noticeable 15-cent increase from last week. Franklin, $3.28 per gallon. Idaho Falls, $3.34 per gallon. Lewiston, $3.54 per gallon, a 13-cent rise week over week. Pocatello, $3.38 per gallon. Rexburg, $3.38 per gallon. Twin Falls, $3.44 per gallon. With Idaho's position as the 8th most expensive state for gasoline and the volatility in supply chains caused by neighboring states' energy issues, it's clear that gas prices remain a complex puzzle affected by factors far beyond local control. What do you think? Should Idaho drivers expect prices to stabilize soon, or is this upward trend a sign of things to come? Are the impacts of regional supply disruptions being handled effectively, Or could there be better solutions? Your thoughts could shed light on this ongoing debate, so feel free to share your perspective in the comments below.